Assalamualaikum and good day. My name is Aisafia and I will begin our group presentation today. Our topic is based on telecommunication industry in Malaysia, focusing on Maxis Berhad and Telekom Malaysia Berhad. We choose this company because it plays an important role in supporting Malaysia's digital economy, especially with the growth of 5G, broadband and digital services. The objective of this analysis is to evaluate the financial performance and investment viability of this company using scenario analysis and PV over 3 years projected period from 2035 to 2037. Firstly, I will briefly explain the background of both companies. Established in 1993, is one of the leading mobile telecommunication provider in Malaysia, offering mobile voice and data, fixed broadband and enterprise solution, with a strong focus on network quality and 5G expansion. Telekom Malaysia Berhad, established in 1984, is Malaysia's largest fixed line and broadband provider and is well known for its unified fiber broadband. Now I'll pass to the next presenter, Adam.
Assalamualaikum, my name is Adam Iskandar bin Shahrul Amri and now I'm going to explain business analytics applications. So this figure illustrates the revenue performance of Telekom Malaysia and Maxis from 2022 to 2024. Overall, Telekom Malaysia consistently recorded higher revenue compared to Maxis throughout the 3-year period. In 2023, both companies experienced revenue growth, which reflects the increasing demand for data usage and digital services in the telecommunications industry. By 2024, TM's revenue showed stability with a slight rebound, while Maxis continued its steady upward trend. In conclusion, TM remained the market leader in terms of revenue, while Maxis demonstrated gradual and consistent growth over the period. This figure shows the operating expenses of Telekom Malaysia and Maxis from 2022 to 2024. Overall, Telekom Malaysia recorded higher operating expenses than Maxis throughout the period, reflecting its larger scale of operations. Over the 3 years, TM's operating expenses gradually declined, indicating effective cost optimization. In contrast, Maxis experienced an increase in operating expenses in 2023, followed by a slight stabilization in 2024. Overall, TM demonstrated improved cost efficiency while Maxis maintained relatively stable operating expenses. This figure shows the net income performance of Telekom Malaysia and Maxis from 2022 to 2024. In 2022, both companies reported similar net income levels, with Maxis slightly ahead. In 2023, Maxis net income declined, indicating a temporary drop in profitability, while TM saw a significant increase, reflecting better operational efficiency and revenue management. By 2024, both companies improved their profitability, with TM further strengthening its net income and maintaining a consistent growth trend. Overall, TM showed a stronger and more stable profitability, while Maxis recovered after a temporary decline.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Nafisah binti Abang Akidil alias Akidil and my matrix number is 2023239512. This section presents a time series analysis of Maxis Berhad's performance from 2022 to 2024. In terms of liquidity, Maxis shows a weakening position. The current ratio declines from 0.6 to 0.5, indicating reduced ability to meet short-term obligations. The quick ratio remains at 0.6 while the cash ratio stays at 0, showing almost no immediate cash available. This is reflected in the net working capital, which deteriorates from negative 2,031 ringgit to negative 6,868, indicating increasing financial pressure and reliance on receivables. For efficiency, Maxis becomes less effective in managing receivables. The average collection period increases to 55.8 days and receivable turnover falls to 6.4 times, indicating slower customer payments. Inventory turnover is volatile, suggesting inconsistency. However, asset utilization improves as both fixed asset turnover and total asset turnover increase, although slow collections may continue to pressure working capital. Maxis shows a high dependence on debt financing. The debt ratio remains at 0.5 while the debt to equity ratio stays between 1.8 and 1.9, indicating heavy reliance on debt. The equity ratio remains low at 0.3, reflecting limited shareholder funding. Although leverage is stable, the times interest earn ratio drops to 3.5 in 2023 before improving to 4.3 in 2024, showing temporary pressure in servicing interest. In terms of profitability, performance remains weak. The net profit margin declines to 0.5, ROA stays at 0.6%, and ROE remains at 0, indicating poor returns to shareholders.
For Telekom Malaysia, the liquidity ratio showed that the company is in a relatively stable short-term financial position. The current ratio slightly declined from 2022 to 2024, but it remained above 1, indicating that TM is still able to meet its short-term obligations. The quick and cash ratio stayed fairly consistent, suggesting adequate liquid assets despite minor fluctuations in working capital. In terms of efficiency, TM's receivable turnover and fixed asset turnover generally improved over the period, showing better utilization of assets and improved collection efficiency. Although inventory turnover fluctuated, overall asset turnover increased in 2024, indicating that Telekom Malaysia became more efficient in generating revenue from its assets over time. Looking at Telekom Malaysia's leverage ratios, the total debt ratio and debt to equity ratio steadily decreased from 2022 to 2024. This indicates that the company relied less on debt financing and strengthened its equity position. At the same time, the equity ratio increased, showing improved financial stability. For profitability, Telekom Malaysia showed strong improvement across all indicators. Net profit margin, ROA, and ROE all increased over the 3 years, especially in 2023 and 2024. This reflects better cost management and stronger earnings performance, suggesting that TM not only reduced financial risk but also improved its overall profitability. In this cross-sectional analysis, we compare Maxis and Telekom Malaysia in terms of leverage and profitability. Telekom Malaysia has a lower total debt ratio and debt to equity ratio compared to Maxis, indicating lower financial risk and less reliance on debt. TM also has a higher equity ratio, which reflects stronger capital structure stability. In terms of profitability, Telekom Malaysia outperforms Maxis in net profit margin, while both companies record similar ROA and ROE levels. This suggests that although both firms generate comparable returns, Telekom Malaysia is more efficient in converting revenue into profit, making it financially stronger overall.
Compared to Telekom Malaysia Berhad, Maxis is more highly leveraged. Maxis records a higher debt ratio and debt to equity ratio, with a lower equity ratio indicating greater financial risk. Maxis also has a much lower times interest earn ratio of 4.3 compared to Telekom's 14.1, showing weaker ability to service debt. In terms of profitability, Maxis performs slightly worse, with a lower net profit margin, while ROA and ROE are similar for both companies. Overall, Maxis faces challenges in cost control and operational efficiency.
My name is Noor Shazadamia and I will present about the content of what-if analysis and financial projection. First, for the scenario assumptions for both companies, three economic conditions are used: economic boom, normal condition, and economic downturn. If revenue growth is treated as the key variable, under the economic boom scenario, revenue is assumed to increase by 10%. In the normal condition, revenue grows by 5%, while in the economic downturn scenario, revenue declines by 5%. All other assumptions are kept constant to ensure consistency. Operating costs, including cost of goods sold and fixed costs, increase by 3% annually. Depreciation is calculated using the straight line method and a fixed tax rate of 24% is applied. This approach allows the analysis to isolate the impact of revenue change on profitability and project value. The scenario results show that Telekom Malaysia Berhad maintains a positive financial position under all economic conditions. In the economic boom scenario, higher revenue growth leads to increased net income across the projection period. This results in the highest net present value of 31.68 million, indicating strong cash flow generation and value creation. Under normal condition, revenue grows at a moderate and sustainable rate. Net income remains consistently positive, producing an NPV of 28.80 million, which confirms that the the project is viable under expected market conditions. Even in the economic downturn scenario, Telekom Malaysia Berhad still records a positive NPV of 27.36 million, demonstrating strong financial resilience. The projected income statement for Telekom Malaysia Berhad covers the period from 2025 to 2027 and is based on historical performance and forecasting assumptions. Revenue is projected to grow steadily from 12.30 million to 13.56 million by continued demand for telecommunications and digital service. EBIT increased from 2.48 million to 3.14 million, while net income rise from 2.31 million to 2.88 million. The faster growth in EBIT and net income compared to revenue indicates effective cost management and improved operational efficiency. Depreciation is calculated using the straight line method and the corporate tax rate remains fixed at 24% to maintain consistency. The projected cash flow statement highlights Telekom Malaysia Berhad's strong cash generating ability. Cash flow from operation is calculated by adding depreciation back to net income. Operating cash flow increased steadily from 4.45 million in 2025 to 5.02 million in 2027. Compared to the initial investment of negative 1.58 million recorded in year 0, this operating cash flow indicates that the project can recover the initial capital within a relatively short period. This demonstrates strong liquidity, low financing risk, and the ability to reinvest or distribute excess cash. The net present value analysis is conducted using a discount rate of 10% to reflect the time value of money and investment risk. All scenarios produce positive NPVs. The economic boom scenario records the highest NPV at 31.68 million, followed by 28.80 million under normal condition and 27.36 million under economic downturn. This result confirms that the project is financially viable under all economic conditions. To conclude that Telekom Malaysia Berhad demonstrate strong financial stability, low investment risk and the ability to create long-term value.
I will now continue with the presentation. Based on the scenario summary for Maxis Berhad, three economic conditions were analysed. During economic boom, Maxis recorded the highest revenue and net income due to strong demand. Under normal condition, the company showed a stable and consistent performance. During an economic downturn, revenue and profit are declined, but Maxis remained profitable. Overall, Maxis performed best during economic expansion and remains financially viable across all scenarios. Next, I will explain the projected income statement for Maxis Berhad from 2025 to 2037. It's based on normal economic conditions with steady revenue growth. Revenue increase each year while operating costs are controlled, resulting in a consistent increase in net income over the 3 years period. Maxis is able to maintain profitability through effective cost management. For the projected cash flow statement, operating cash flow is calculated using net income plus depreciation, where depreciation is added back as is a non-cash expenses. The cash flow show a consistent increase trend, indicating strong liquidity. This means Maxis is able to cover operational cost need, recover the initial investment, and support future growth. I will explain the NPV for Maxis Berhad. NPV is calculated using 10% discount rate, with initial investment recorded as a cash outflow in year 0, which is year 2024. The results show the NPV is positive across all the scenarios. Under normal condition, the positive NPV indicates that project creates value and is financially viable. Therefore, the investment in Maxis Berhad is acceptable.
To conclude, the analysis shows that Telekom Malaysia demonstrates stronger financial stability compared to Maxis, supported by healthier liquidity, lower leverage, and improving profitability. Time series analysis indicates consistent performance improvement over the 3-year period, while cross-sectional analysis confirms TM's stronger capital structure. Additionally, the what-if analysis and positive NPV results across all scenarios suggests that Telekom Malaysia is financially resilient and capable of sustaining long-term growth. Overall, Telekom Malaysia presents a more attractive and stable investment opportunity within Malaysia's telecommunications industry.